Most people know that they want to buy a house, but they don't really know what happens between I want to buy a house and getting the keys. So in this video, I will talk about a 9-step home buying process. So by the end, you should know exactly what happens during the home buying process and what you should do at each step. And if you'd like a printable version of everything we've talked about today that goes a little bit more in depth, I'll put a link in the description so you can get that. Step 1 is decide if you're really ready to buy. A lot of people focus on whether they can qualify for a mortgage. Now that's important, but it's not everything that you need to think about. Maybe you're still trying to pay off credit card debt and build an emergency fund. Or maybe you're still in school and taking out school loans to get that finished up. Or maybe you need to save up money for a down payment or work on getting your credit up. Also, owning a house comes with a lot of responsibilities. For example, if the water heater or the furnace goes out, you've got to pay for that. If the roof leaks, you've got to pay to get that fixed. That doesn't mean you shouldn't buy a house, it just means be prepared for realities of home ownership. Step 2 and 3 are interchangeable, but we'll start off with step 2, which is figure out your budget. A lot of people ask themselves how much house they can afford. I think the better question is, how much house do I want to afford? As a real estate agent here in Utah County, I've seen too many clients want to shop at the max amount that they're pre-approved for. But when you break it down into monthly mortgage payments, it ends up being way more than they want to spend. The lender sees your income, but they don't really see the things you have going on in your life. For example, a lender might approve you for a $3,500 monthly payment. So can you make that payment? Probably, but think about your life and what you have going on. Like, do you like to travel? Do you have kids in sports or other school activities that cost a lot of money? Here in American Fork, it's more expensive to be in the marching band than play football in high school. Do you want to eat out every once in a while or go to a movie? Do you want to have money left over for savings? Just leave yourself a little bit of breathing room for things that are important to you, and don't spend every last dime on your mortgage payment. Don't go with the max amount that your lender approves you for. Also, look at your savings. You'll need money for a down payment. Depending on the loan that you get, the minimum down payment will be different, but I would plan on around 3 to 3.5% minimum for your down payment. Now, there are exceptions, like a VA loan doesn't require anything down. There are also down payment assistance programs that you can check into with your lender to see what you would qualify for. Besides the down payment, you will need money up front for earnest money. Now here in Utah, you can put whatever you want down as earnest money, but typically you would put about 0.5% to 1% down. So if, say you have a $550,000 home, your earnest money would be around $2,500 to $5,500. That will go towards the purchase price of your home. And you also need money for inspections. I'll talk about that later. You'll need money for closing costs, which could be 2 to 3% of your purchase price. But your lender can give you more accurate estimates based on your specific situation. You can also negotiate to have the seller pay a portion of the closing costs. You'll also need money for moving expenses. Step 3 is talk to a lender and get pre-approved. Even if you're not planning to buy tomorrow, this is a great step because a lender can help you understand where you are today and help you get where you need to be, like if you need to bring your credit score up or if you have other issues. Here are some questions you want to ask your lender. What loan programs do I qualify for? Around what interest rate am I getting? Well, they won't be able to give you a specific one, but kind of the general area. What are my estimated closing costs? How much money will I need up front? Are there any down payment assistance programs? What would my monthly payment look like? Getting pre-approved is one of the first steps of buying a home, so you know what price range you should look at. Your lender is going to look at your income, your debts, and your finances to see how much money you can borrow. The lender will review your financial documents and information. Now, I am not a lender. Your lender will tell you the specific documents you need, but here's a general overview of what you might expect. If you work for a company or you receive a W-2, they'll usually ask you for recent pay stubs, W-2 forms for your last 2 years, recent bank statements, and a driver's license or other government-issued ID. They'll also review your debts, like your car loans, your student loans, credit card balances. Do you have any child support or alimony payments? If you're self-employed, or if you own a business, or if you are an independent contractor or receive a 1099. This might include personal and business tax returns from the last 2 years, a current profit loss statement, recent bank statements. The lender just wants to verify that you have a stable income to pay your mortgage. So while you're going through the loan process, if you're planning on using money as a gift from family members for part of your down payment, let your lender know early. There are specific rules for documenting gift funds, and it's a lot easier when everybody knows about it from the very beginning. Also, don't move large amounts of money between accounts without letting your lender know. Don't spend large amounts of money on anything or finance anything during this whole home buying process until you've closed. When your lender asks you for paperwork, get it to them quickly, because the faster you can get it to them, the smoother and the faster everything is going to go. Step 4 is finding a good real estate agent. Buying a house involves a lot of contracts, a lot of deadlines, inspections, negotiations, disclosures, and a lot of paperwork. A good real estate agent is going to educate you on the process and guide you through all of it. They'll explain what you're signing, and they'll point out potential concerns. They can negotiate on your behalf. They'll keep you on track with all the deadlines. Here's what you might want to think about when you're looking for an agent. Make sure they are responsive to you. Make sure they respect your budget. Make sure they explain things clearly. A good agent should not pressure you into buying something quickly. They should not ignore your budget. They should not be hard to reach, and they shouldn't make you feel dumb for asking questions. So if the seller has an agent working for them and looking out for their interests, you should have an agent looking out for your interests too. Now, most of the time, your real estate agent is paid by the seller, so you usually won't pay anything out of pocket for their services. But if the seller's agent is not offering to pay a buyer's agent, you may need to talk with your agent about how they're going to be paid. Step 5 is create your home wish list. You're going to make 2 lists. The first one is going to be your must-haves. For example, it could include 3 bedrooms, 2 bathrooms. It's got to be in a safe neighborhood. It's got to have a good commute. Second list will be your nice-to-haves. This might be large backyard, a finished basement, a mountain view, or a 3-car garage. The reason this matters is because no house is going to be perfect. Give these lists to your real estate agent. They will get you set up on a listing alert that will send you new listings with the parameters that you've set. Eventually, you're going to find a house that checks maybe 8 out of the 10 boxes. Just make sure your must-haves are part of that. Step 6 is you're going to tour homes and make an offer. This is usually everyone's favorite part. But when you go to look at houses, try not to focus so much on the cosmetics, because that staging furniture that makes the house look amazing is not going to stay with the house. Also, the paint color that you think is so ugly can be painted over. That worn out 20-year-old carpet can be replaced. Pay attention to the things that are harder to change, like the layout of the home, or the location, the lot size, the neighborhood, or the traffic and parking. Look at the house during different times of the day if you can. Sometimes things change with the different times of the day, like traffic and parking. Here's questions you might want to ask when you see the house, like how old is the roof? How old is the HVAC system? Are there any foundation issues? Any water damage you can see? Are there any HOA fees? Are appliances included? Once you find the right house, your agent can help you put together a fair offer and negotiate your interest during that whole process. Right here in Utah, there is usually a little bit of a back and forth with counteroffers before an offer is accepted, so be prepared for that. Make sure your agent includes contingencies in your offer to protect your earnest money, like an inspection period, which is also called due diligence, or an appraisal contingency. Once your offer is accepted, your earnest money needs to be turned into the brokerage within 4 calendar days. Step 7 is complete the inspection. Once your offer is accepted, you will have a due diligence period, which is usually around 7 to 14 days, where you need to have a home inspector come in and help you understand the condition of the property, like the plumbing, the electrical, HVAC, the roof, or the foundation. If you don't know a good home inspector, your real estate agent can recommend 2 or 3 to you. Depending on the size of the house, I would say you pay around $300 to $600 for a general home inspection. There are also 3 add-on tests that I will always recommend. The first one is a radon test, number 2 a meth test, number 3 a sewer scope. If you see any water damage, I would also add a mold test. Now these tests are going to be extra on top of the home inspection, but it's worth it for your peace of mind, I think. Radon is a colorless, odorless, radioactive gas that seeps into homes through the soil underneath the foundation. Utah's state geology contributes to higher radon levels in certain areas in Utah County. So you'll want to get this test because if you do have high radon levels, it can cause lung cancer over a prolonged period of time. Mitigation usually runs a couple $1,000s. A meth test. You'd be surprised at how many homes are contaminated with meth. I don't care if it's a grandma house or a new construction house. I'd rather have you find out now and have it mitigated by your seller rather than living in it for 5 years, and then when you go to sell the house, your buyer does a test and finds out it's contaminated, and then they ask you to pay for mitigation or remediation. Depending on the severity of the contamination, it can cost upwards of $10,000 to fix that. Now, a sewer scope is going to help find pipes that are cracked or broken before you buy the house. Even with new construction, you can make sure the sewer line is hooked up to the city sewer system. Because there have been cases where homes were not hooked up to the city sewer system, which could have caused a major sewage backup after you moved in. So repairs like this can cost sometimes upwards of $10,000, depending on if they have to dig up concrete, dig up landscaping, or go into the street. So during the due diligence period is when you can negotiate for repairs or seller's concessions for repairs. You just have to have that done by the due diligence deadline. Now, if you get into inspections and there are a lot of red flags and you're thinking, well, I'm really not sure that I want to deal with all this, then if you're under contract with a contingency on due diligence, you can back out at this time and get your earnest money back. Step 8, an appraisal and loan process. Your lender is going to order an appraisal on the property that you're under contract with. Now, the appraisal is going to determine the value of the home. You do this to make sure the house is worth at least as much as you're paying for it. So if you happen to default on your loan, they can get their money back. The lender will usually only loan up to the appraised value of the home. So if the appraisal comes in lower than the purchase price, you're going to need to work with your agent and your lender to find out the next steps. Most likely that would be to negotiate with the seller to lower the purchase price, or you can come up with additional funds to cover the difference. If neither of those work, and if the sale is contingent on the appraisal, then you can back out at this point too. Sometimes buyers make mistakes during this time that can affect their loan. We talked about this a few minutes ago. They start buying things like a new couch or a new refrigerator for the house. Just don't do it. Until the transaction closes, keep your finances as stable as possible, because if you make big purchases or finance things, that changes your debt to income ratio, and then that can affect your loan and you may not be able to close on your house. Step 9 is final walkthrough and closing day. Right before closing, you'll do a final walkthrough. When you do this, you're making sure the home is in the condition that you expect. Like, is there anything changed from when you put your offer in? Are the repairs that you asked for done? Are inclusions left in the house? Say the fridge was included, is it still there? Are there things in the house that you didn't want that are not removed? Okay, then comes settlement. You're going to go to the title office and you're going to sign a lot of documents, probably more than you ever wanted to sign. But once everything is completed, the paperwork goes to the county recorder's office to be recorded. This usually takes 24 to 48 hours, depending on when you sign paperwork. In Utah, you cannot get the keys to the house and move in until it is recorded with the county recorder's office. So finally, after all of this work, you are a homeowner. Just know that you don't have to know everything on day one. You can let your agent guide you through everything and help you with the process. Also, just a reminder, if you'd like my free home buying process checklist, I will put the link in the description below. If you like this video and you want to watch more, watch this one next.